Today I'm going to compare three different types of S&P 500 ETFs. I'm going to compare a regular standard S&P 500 ETF, a equal weight S&P 500 ETF, and a ESG S&P 500 ETF. So the first one I want to look at is the Vanguard S&P 500 fund. This is one that everyone is pretty well aware of. It has the lowest expense ratio, 0.03%, a 30-day SEC yield, 1.57%, and its Vanguard VOO has 505 stocks, median market cap $172 billion, $820 billion in assets held in this fund. The next one I want to look at is the Invesco S&P 500 Equal Weight ETF. Now this one's been around for a while, but it hasn't really taken off. This one has a 0.20% expense ratio, so about 7 times more expensive than the Vanguard fund, and it has 504 holdings also, except this one is rebalanced quarterly instead of every year, and it's rebalanced so that they all have equal weight. It's rebalanced so that they all have equal weight in each stock, so that the pie size is the same for each stock versus the Vanguard S&P 500 fund where the top holdings are larger slices than the ones near the bottom. This one has a market cap of $33 billion, so it's pretty good size. Here you can see the performance between the S&P 500 Equal Weight Index and the regular index. It's kind of a toss-up. Over time, the S&P 500 index seems to win. If you look at the 5-year and the 10-year, 11.45 versus 9.95. But there have been years where it's done better. It's done better for the 3-year, 16.8% versus 14% for the S&P 500 fund. If we look at the asset allocation on RSP, it's quite a bit different than VOO. Information technology, instead of being roughly 20 or 30% for VOO, it's only 13.37%. And you've got quite a few financials in this, 13.62. Okay, why invest in RSP? Currently, the top 10 companies in the S&P 500 make up over 25% of the index. You may not be properly diversified as a result. Concentration risk. Diversify with equal weight approach. Okay, here it's showing on the left here is the regular S&P 500 fund. It's showing here in the dark blue that 100 companies equal 70% of the value, 69% of the value. Whereas with this one, you've got it equal for each group. Okay, and the last one I want to look at is the sort of a new thing that I really haven't been paying too much attention to. It's called the ESG. This is the Ishares ESG Screened S&P 500 ETF. This is the only one I could find that was the S&P 500 ESG. ESG is this, ESG stands for Environmental, Social, and Governance. It's supposed to invest in companies that are less harmful to the world than others. So ones that don't pollute so much, carbon emission reduction. Now they added a bunch of social stuff in there that they had environmental funds like this in the past, but they didn't have all this social stuff in there. So this says mental health, customer success, gender and diversity inclusion, data hygiene and security. It's quite a bit of stuff. Ishares ESG Screened S&P 500 ETF seeks to eliminate exposure to certain controversial business areas while accessing large cap stocks, used to build a sustainable equity portfolio for the long term. Now this one, they filtered out the stocks that they think are dirty or bad for this ESG thing. And so this one has only 451 stocks. So they've eliminated roughly 50 stocks. But if you look at the top holdings, it looks pretty similar to the others. It looks pretty similar to the regular S&P 500. It's Apple, Microsoft, Amazon. This one only has 129 million in assets under management. When you look at the asset allocation, it's information technology, 28%. So it looks pretty similar to the regular S&P 500 fund. But one thing I've noticed is that the energy is much smaller on this one. So I guess they can't invest in energy since most of it is considered not carbon neutral or whatever. Now this one has a 0.08% management fee, so it's almost 3 times more expensive than the Vanguard one. they have a score rating, and I've never seen anything that's, the score rating to me is very complicated, and it doesn't make a whole lot of sense. So I'm not going to get into that, but they have some sort of metrics here that they go into. And for the purpose of this video, I'm not going to go into that because I don't know much about it. I'm mostly going to compare just the performance. If we look at the 5-year return, let's just do the price return. Here's the 5-year price return. We see that for the 5-year price return, Vanguard has done the best. Vanguard is in orange here. You can see that's at the top most of the way. Now, second is the RSP, and it did 39%. This is just the price return versus 53 for Vanguard. Now, XVV is too new, so we can't really compare this one in there. If we look at the total return, Vanguard did the best at 67.2%, 52.9% for RSP. So not too far behind, but it didn't do as well as the Vanguard. Now let's look at we can look at roughly a 2-year period for this one. Okay, so now we have roughly a 2-year period. If we look at the 2-year period, just the price return, the top performer was RSP at 10.29%, then VOO, and then XVV. The ESQ didn't do so well in this one. Now let's switch it to total return. Total return, RSP 14.4. So for the total return, RSP did the best at 14.4. Vanguard 13.3 and XVV 11.7. Now let's do the 1 year. Now if we do the 1 year return, let's do the total return. Okay, total return. The total return 1 year, the best performer was XVV at 9.96%. VOO is not very far behind though. You can see VOO is in orange, and VOO had that track record of the strong 5-year performance, and it's got the lower expense ratio. So I would suspect that over time, VOO is going to do better. And when we look at the 1 year, RSP is not doing very well at all, only 3.13%. When we look at the dividend yields for each of these, the RSP has the highest dividend yield at 1.82. VOO is number 2 at 1.57. XVV is 1.33. As far as the asset turnover, VOO is the lowest at 2%. XVV is 3%. And RSP is 18%. And I think that's because it does it quarterly. I'm not sure if XVV does it. I believe they don't do it quarterly. Otherwise, I would think the turnover would be higher. What counts as ESG? There is no single definition of ESG. That's a bit concerning. Okay, I found an article on Schwab's website. How well has environmental, social, and governance investing performed? ESG funds have ranked near the middle of their peer groups. So far it hasn't done so well. A fund that ranks, they looked at the ESG funds. They looked at the ESG funds to see how their performance ranks relative to funds in the same Morningstar category for a 3-year period. Now the ESG is right here, all ESG funds. Equity funds are in blue. ESG funds have consistently ranked around the middle of their peer group, sometimes a bit below the middle, sometimes a bit above. Let's take another look at their holdings. I did hear that Tesla was removed from this index a while back. It looks like they're back again, so I'm not sure what happened with that. But you don't see any energy companies, that's one thing. Mostly tech, Salesforce, Coca-Cola. Now, I guess they can't exclude every company for every little bad thing they do, because otherwise you probably wouldn't have any companies listed. So they do have, Coca-Cola's listed, and Ralph Lauren, Zions Bank. Okay, here's the fun fact sheet for iShares XVV. Now it shows, I guess, what the intended purpose of this ESQ is supposed to do. So they're showing that their XVV reduces the carbon intensity by 35% over a S&P 500 index investment. Also, they have small arms, tobacco, fossil fuels, controversial weapons. I guess they don't invest in those. So that probably means not many defense companies. No oil sands or shale, thermal coal. All right, so what are my thoughts on this? I think based on the performance, the ESG is just too new to really see the benefits. And looking at the performance, it did better in the very short period of time, but it hasn't been around long enough. And with the higher expense ratio and the questionable metrics, so based on the limited performance of this ESG XVV fund, I would say that the performance isn't really good enough for me to justify making an investment in this over VOO. I'm going to continue to invest in VOO over something like this or RSP because I think over the long run, the performance has been better. And if after several years XVV starts to do better, then maybe I'll consider that. But for now, I'm going to stick with VOO. If you like videos like this, please make sure to like, share, and subscribe.